Okay, let's back into the financial statement analysis of NVIDIA. Let's break down this table of margin ratios for NVIDIA in a simple way. Margin ratios show how much profit NVIDIA makes at different stages of its business, like after covering costs or selling products. Gross margin. This shows how much money NVIDIA keeps from sales after paying to make its products. The best year was approximately 73%, meaning they kept over 72 cents of every dollar sold. The worst was approximately 57%, and on average, it's approximately 62%. This means they are usually great at keeping a big chunk of sales as profit, especially in 2024. Selling, general, and administration expense margin. This shows how much of NVIDIA's sales goes to things like marketing, salaries, and office costs. The, the highest was 11.63%, and the lowest was 4.36%. This means they are keeping these costs under control with a big drop in 2024. EBITDA margin. The margin, the profit before interest, tax, depreciation, and amortization costs. This is this measure's best was approximately 60%, and the worst was 20.20%. This measures profit, uh, also operating income of the company. Net profit margin. NVIDIA is doing an amazing job at making and keeping money. They are keeping a big chunk of their sales as profit after paying for products, running the business, and covering all costs. Sometimes over 72% in the best year. Even their worst years still show decent profits, and on average, they keep about 25% to 40% of sales depending on the measure. The big jump in 2024 shows they are getting even better, especially at turning sales into final profits. This means Nvidia is super uh, healthy company that is great at managing its money and growing its profits. On top of that, their ability to maintain strong margin across different areas like gross profit, operating profit, and net profit shows they are not just good at selling products but also at controlling costs and making smart business decisions. The steady improvement over the years, especially the standout performance in 2024, suggests they are riding a wave of success, possibly thanks to their popular AI and gaming chips. This consistency and growth make NVIDIA a reliable and existing company to watch as they keep finding ways to turn their sales into more and more profit for themselves and their investors. This is the money left after all costs. Page 5. Okay, now let's break down this table of financial health ratios for NVIDIA in a simple way. These ratios are like health check for how well NVIDIA can pay its bills, manage debt, and handle its money. The table covers 5 years and shows the highs, lows, and average values for each ratio over those years like above measurements. These numbers helps us see how financially stable Nvidia is and how well they are managing their money. Current ratio. This shows how easily Nvidia can pay its short-term bills like rent or supplier payments with the money it has on hand, like cash or things it can quickly turn into cash. In 2020, they had approximately 8 times, meaning for every dollar they owed, they had $8, uh, approximately $8 to cover it. That is super safe. By 2024, it dropped to 2.69 times, which is still good because they have um, $2.61 for every dollar they owe. On average, it's approximately 4 times, meaning they usually have more than enough to cover their bills. Even though it went down over time, they are still in strong position to pay what they owe without any trouble. Cash flow to death. This shows how well Nvidia's cash flow, money coming in from their business, can cover their debt. In 2020, they had approximately 2 times, meaning their cash flow was 1.64 times their debt. They could easily pay it off by 2023 and 2024. It dropped to 0.66 times, meaning their cash flow is 66% of their debt, which is still okay, but less comfortable. On average, it's 0.98 times, meaning their cash flow almost matches their debt. The drop shows they might have taken on more debt to grow, but their cash flow is still strong enough to manage it. EBITDA interest coverage ratio. This is similar to the last one, but it usually uses slightly different profit measure. In 2020, their earnings were 62 times, their interest very strong. By 2023 and 2024, it dropped to approximately 20 times, which is still great. They can pay their interest 21.83 times over. Nvidia is really strong financial position. They have plenty of cash and resources to pay their bills easily, even their worst years. In 2020, they had tons of cash compared to their owed, and even though that dropped it about 2.61 times by 2024, it's still more than enough to cover their bills without any stress. Okay, over the years, they have taken a bit more debt to grow their business, like making more AI chips, which is why some numbers like cash flow to debt went down a bit. Overall, Nvidia is a very healthy company with lots of cash, manageable debt, and strong ability to grow without taking big risks. They're doing awesome. Okay, great investors. We have fulfilled the 2 chapters of financial statement of NVIDIA. Thanks for watching. If you ask anything, feel free to ask in the comments. Thank you so much.